Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 19th of February 2023. And last week we saw gold and silver prices fall. Part of the reason was essentially to do with the rather disappointing CPI figures, in that they were slightly higher than anticipated, and also the retail sales figures were considerably higher than forecast. What impact did these have on gold and silver? We'll take a look, and what is likely to affect the gold and silver price is coming up. Okay, a quick shout out to two videos, links for which we've placed below. Greg reveals shocking details of the World Economic Forum's plans to send us back to the Stone Age, and our gold and silver price forecast for 2023. Now, what happened to gold and silver last week? Well, gold fell $22, falling from $1,865 to $1,843, having hit a high of $1,870 and a low of $1,819. That was a fall of 1.2%. In sterling terms, it finished the week at £1,531. That's down £17. And in euros, it closed at €1,724. That's down €24. Silver fell 29 cents, falling from $22.03 to $21.74, having been as high as $22.63 and as low as $21.19, a fall of 1.3%. Now that's 5 weeks of consecutive reductions in the price of silver. Now last week we stated, haven't you noticed over the past month those pumpers have been out in force, and the YouTube idiots following them telling you that silver's on the verge of a miraculous hike up? Well, we're still waiting. In sterling terms, silver closed at £18.08, down 20 pence on the week, and in euros it closed at 20.37, that's down 0.27 euros. The gold to silver ratio rose, but ever so slightly, from 84.6 to 1 to 84.8 to 1. Now the difference between gold's high and low was $51, compared with the previous week's $37. And the difference between silver's high and low was $1.44, and that compares with the previous week's 78 cents. Now we predicted last week that we expected both precious metals to be a little soft. We envisaged gold trading between 1800 and 1900, with 1775 to 1925 as outliers, and we anticipated gold to trade much of its time within the 1825 to 1875 bracket. Now gold traded within our range, and apart from a momentary dip on Friday to $1,819, it stayed within the very tight range of 1825 to 1875. Now we also envisaged silver trading between $21.25 and $22.50 for the main part, with 21 to 23 as outliers, and once again, exactly as predicted, occurred. Now before we delve deeper into what happened to gold and silver and why we saw the rise on Friday, let's take a look at other financials. Bitcoin currently stands at $24,563. That's up $2,823 on the week. It's had quite a roaring week, as has most cryptocurrencies. And with regards to equity markets, apart from the Nasdaq, they were marginally lower. The Dow Jones closed on Friday at 33,826. That's down 43 points. The S&P 500 closed at 4,079. That's down 11 points. And the Nasdaq Composite closed at 11,787. And that's up. So it's gone against the trend. That's up 69 points on the week. Oils closed lower. Brent crude closed at $83. That's down $3.39. And WTI crude closed at $76.34. That's down $3.38. The dollar index, though it fell back on Friday, still stands higher than last week, and it now stands at 103.86. That's up 0.23 points on the week. Now, last week we stated that CPI on Tuesday and retail sales on Wednesday were the figures to watch out for? Well, the reality is that the cost of living rose 0.5% in January, the biggest increase in 3 months, in a possible sign that US inflation might not slow as quickly as hoped. Higher housing costs and gasoline prices accounted for most of the increase. Economists had forecast a 0.4% advance in the Consumer Price Index for last month, but we got 0.5. Consumer prices also rose 0.1% in December instead of declining, according to the revised government figures. So government figures showed for December a decline, but in fact they actually went up. Now the annual rate of inflation meanwhile slowed again to 6.4% from 6.5%. That was the lowest level in 15 months. The so-called core rate of inflation, which omits food and energy, advanced 0.4% for the second month in a row. It was above the Wall Street forecast of 0.3% gain. The increase in the core rate over the last 12 months has tapered, though, to 5.6% from 5.7%. Now, the Fed views the core rate as a more accurate predictor of future inflation trends, though it's our view that omitting food and energy underplays the real rate of inflation most people experience, especially at the lower end of the income scale. Now, this stickiness of inflation, because although it's gone down, it's so marginal, would lead one to take the view that the Fed will continue to raise rates at its next meeting by at least 0.25%. However, the retail sales figures announced on Wednesday, a rise of 3%, is a clear sign as far as economists are concerned that the economy is still growing. This 3% rise is the largest in nearly 2 years. Market expectations were for a rise, but only at 1.9%. Now, for those interested, one category economists watch closely is bars and restaurants, which is the only service sector in the retail report. Restaurant sales soared 7.2% last month after falling slightly in the last 2 months of 2022. Restaurant sales tend to rise when the economy is healthy and Americans feel secure in their jobs. Sales soften during times of economic distress. So these two figures would suggest, when combined, that it would be prudent for the Fed to raise rates by 0.5% at its next meeting. And we would predict that, save for one thing. Each January, the government reassesses how it measures some of these figures, which tend normally to increase the January figure, only to settle back down again thereafter. So they're not necessarily a great guide to follow until they are either supported or undermined by February's figures. So for the moment, we suspect that the FOMC will not panic but will keep rates at an increase of 0.25%, unless, of course, the next farm payrolls is extremely strong, and they may be tempted to go for 0.5%. But at the moment, we're forecasting 0.25%. These figures, though, certainly put pressure on gold and silver during the course of the week, which both regained some losses on Friday. Now, this coming week, the US is announcing flash manufacturing and services PMIs on Tuesday, the FOMC minutes from the 1st of Feb meeting on Wednesday, and various PCE indices on Friday. And it's this that we need to watch quite closely. So, looking at gold, it seems to have gained some reasonable support on Friday, and the 1809 level, which is where the 50-week EMA rests, is very supportive as far as technical analysts are concerned. There are two schools of thought, though. One, gold is currently cheap, just above the 1800 level, and should be bought, as it will soon get back to 1900. Or two, gold is still going to suffer from increased interest rates and could fall back to as low as the 200-week EMA, which stands at $1,714. The fact that traders hold both of these views suggests to us that there will be some choppiness in the price of gold over the coming weeks. For now, seeing how strong the economy appears to be, we suspect that gold will err more to the downside than the upside during the next couple of months. Now, silver bounced on Friday after a poor week from the 50% Fibonacci retracement level. Like gold, there are two schools of thought. Those who believe that silver will shortly move above $22, and when it does, will rapidly progress to 24. And the second school of thought is that the dollar strength, with the prospect of future higher rates, will force silver back, potentially to as low as the 61.8% Fibonacci level, which lies just marginally above $20. Now, it is worth noting that on Friday, Treasury yields fell back and the dollar strength receded, which is why we saw a bit of a leap for precious metals yesterday. The conventional wisdom, though, is that this will follow through on Monday, but our attention is on the Fed's minutes and the PCE figures, the latter being announced on Friday. Overall, we still find it difficult to believe that gold and silver will rise significantly in the next few months, because it looks as if inflation is holding reasonably steady and the Fed has made tackling this a priority, which means that even higher rates are going to occur in the foreseeable future. Until these rate increases stop, there will continue to be pressure on gold and silver. So where do we see precious metal prices heading next week? Well, next Friday is going to be a difficult one for us because no one knows where these PCE figures are going to lie. That said, we're maintaining our forecast for gold trading between 1800 and 1900, with 1775 to 1925 as outliers, and silver we envisage trading between $21 and $22.60 for the main part, with 2050 to 23 as outliers. And we've placed links below for our gold and silver price forecast and our discussion with Greg. What are your thoughts? Please do share them. Hopefully give us a thumbs up, but whatever you do, if you haven't done so, please subscribe, press the bell sign, and it just remains to be said, if you're interested potentially in purchasing gold and silver or want to discuss the prospect with someone, we've placed a link below to the Pure Gold Company, the CEO we interviewed last year, who are only not happy just to discuss short-term purchases and sales, but also are happy to discuss longer-term strategies and retirement considerations. They will also offer you a discount or special terms if you state you were referred by Illuminati Silver, and we too, admittedly, will receive a small consideration if any business is transacted. Thank you for listening. Have a great weekend and a prosperous week ahead. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.